Hello everybody, welcome back to another weekly recording for F45trading.com. This week we are discussing September 21st to September 25th, 2020. Almost done September. We've only got another 10 days or so left, a week and a half or so, and September is already wrapping up. It is pretty amazing how quickly time is flying. We are ever so quickly also approaching into that U.S. election, and I'll tell you, it cannot come soon enough. These markets have been going sideways since June. Since July of the summer here. So it'd be great if we started breaking out in one direction or another. So right now we're still in consolidation. Last week was absolutely no different, and we had the only thing that worked out for us last week was this run here last Thursday, which was the US dollar FOMC news that had come out on Wednesday and Thursday, and a whole bunch of news last week, monetary policy statement news events for a couple of different currencies, the US dollar, the pound sterling, things like that. And unfortunately, we still haven't broken free of this consolidation, so they're really building positions in here. The next move that's going to bring this market either higher or lower, it's going to be a big move, folks. Don't kid yourself. We're going to see some massive capitulation happening. And right now, all of the major central bankers and all of the funds everywhere and everyone, they're all hedging their bets right in here and jockeying for position. Don't kid yourself. There are some massive orders being put into the market right now, and we're going to see whether this thing wants to break higher or lower. So again, the only thing we did last week was just run above a few previous days and go right back into the range. And now we had a Friday, pretty much do nothing Friday, just swept underneath these lows here briefly, only to return back up into the range. And now we have, at the time of this video, the open on Sunday, price heading lower. I'd really like to see if they could sweep under these lows here and clean up this area into 4250 land. If we get down there, I think there's a very good chance that we could see some support happening in that area, and then we may see price eventually start to bounce and get something like this. So until we see either price run below 4250 and get back into this consolidated area right in here and start shooting lower, or we go into there and bounce, or just avoid that area altogether and just start running higher, we're still in this range. So we got to buy the lows and sell the highs. That's all we can do. So what I'm waiting, because we are right in the middle of this consolidation, I'm waiting to see if price shoots down into here. If it does, I'm going to be looking for willingness to see how much they want to use this level as support, and possibly see a bounce. If we lose the 9250 level, then I think we can accurately say that we're probably going to head lower, and obviously we can look at taking shorts or opposite trades on different foreign currency pairs and getting in that way. But until it does something, we really can't do a whole lot, unfortunately. We're still stuck in this range. So again, I've said it before, I'm going to say it again, keep your trades small. I posted a trade on my YouTube video here last Friday. Small trade, 50 pips, closed up the week very nicely, in and out of the market. Didn't take very long, and it was just a nice, clean, easy trade. I would highly recommend you doing the same. 20, 30, 40, 50 pips, and call it. Now, of course, you're going to get days where you're going to see the euro or the cable or the yen or the Aussie, rip 80, 100 pips here or there. But right now, we can't predict when those days are going to be. And unfortunately, we're still at the mercy of the US dollar because all those pairs are tied to it. And unless you start trading cross currencies with exotics or something not tied to the dollar, US dollar, we're in this range right now, so we got to deal with it. So I would highly also recommend that you start looking into other commodities and other futures. For example, the grains markets, the soft markets, the meat markets, energy markets, things like that. So when foreign currency does consolidate, you have other markets to go to when you're in this stagnation, because there's nothing worse than trading these types of moves, folks. So that being said, real quickly on the economic news front for the week, we have a action-packed week full of a whole bunch of speakers. We have a speaker on Monday. We have a speaker on Tuesday. We have a speaker on Wednesday. We have a whole bunch of Euro news on Wednesday as well, too. So don't forget about all the flash manufacturing numbers coming out. Right, and then we have a couple of flash manufacturing news events for the US dollar as well, too, at 9:45 a.m. And then we have more speakers. We also follow that up with crude oil inventories for Wednesday as well at its usual day and time. So watch for that. We should see some movement in the oil market. Going into Thursday, we have unemployment claims for the dollar. Now, we don't have a forecast yet. Last week's actual was 860, so we'll see what the numbers look like getting closer to that day. I would anticipate them being much better, so hopefully we'll see a little bit of strength on the dollar. And then going into the rest of the day, we have another speaker and we have two other speakers, and then we have Bank of England Governor Bailey speaking. Lots of speakers. This week, this is the week of speakers, apparently. And then finishing up Friday, we have core durable goods for the US dollar at 8:30 a.m. and that'll wrap up a week. So what does that mean for us? No massive landmines. You're going to want to be careful, though, with these speakers. Again, that's the key of the week is speakers. Figure out what time of day they are coming on at, and just understand that you could see some market volatility associated with these speakers. And you may not want to be trailing your top ultra close to the market price, just in case price decides to whipsaw a little bit on whatever these people are going to be saying. Yeah, that's about all we got. And again, Wednesday, euro is going to move, and the dollar is going to move a little bit on Wednesday as well, too. So that's something to keep in mind. So talking the US dollar, I'd like to see this happen. However, you know, what has price done every single time in the past month or so that it's been down in this range? I shouldn't say month, maybe 2 weeks. We've rejected. So we've been down here 1, 2, 3, 4, 5, we won't call that one, 6, 7 times or so after it broke this high here. Prices come down and rejected. So it rejected. What are we going to do here today? Well, I don't know. Is this the day that we finally break free of that and drop down to 92.50? I'll let you be the judge of that. We're pretty close to it now. I want to see we're at 92.78, and we're not too far to go here, but I'd like to see a quick, sharp movement below, a rejection, and then a movement higher. So we'll see what Monday brings us. And going into Tuesday, if these levels in here offer any support, I would think that price is going to start making a move higher. If we lose this area in here, more specifically the bodies of those candles, expect lower prices. Okay? EurUsd, same tight consolidation, different pair. Again, remember on Wednesday of this week, we've got a whole bunch of flash manufacturing news events for euro, so we will see some movement on this pair. We had price last Thursday just ever so briefly dip below these lows here, and I was hoping for a continuation lower down into this range in here. Unfortunately, we just got a little 2 or 3 pip run below those lows and a very quick rejection, and then a do nothing Friday. So we'll see what we want to do. The US dollar, if you look at the two versus the euro, is much closer to these lows than the euro is to these highs. So we'll see. But if you look at the euro and what we've got, we haven't had a single stop run since price shot above these highs here. So you can see there's liquidity above here, above here, above here, above here. So I would expect price to run a little bit of that out, which is kind of why I'm sort of hoping, wishing, crossing my fingers that we're going to see price dump down into this range here. Clean up a whole bunch of prices under there. If we get that, we should see a little bit of a pop-up in euro. And, you know, and again, watch this level right here. A lot of confluence at that 119.40 level. On EurUsd, we'll see if we get any rejection there. We're not too far away. It's only about 80 pips from current location. So we'll see what Tuesday brings into us. But I'm not doing anything until we see what Tuesday brings, see how Monday trades out, and then going into Tuesday, what the market wants to give us. And then we can place our bets from there. GbpUsd, some mixed ranges in here. We definitely got a reaction, a very noticeable reaction off of these two levels in here, and rightly so. Now the million-dollar question is, do we defend these levels in here and start to see price run higher, or do we just stay in this range in here like we did previously way back here? My money is personally on seeing more of this in here. So for at least the next month or so, I'm going to predict more consolidation. Euro GBP, we had a little bit of help last week with a nice big, 2 weeks ago with a nice big run above, and last week came back down into the range and rejected ever so slightly. So we're going to see this week what we get. Again, keep in mind, if we see lower Euro GBP, we will either see a GbpUsd run higher, or B, see EurUsd run lower. Okay? Reverse what I just said if Euro GBP goes up. Okay? Pretty simple. But right now we haven't done anything. So again, I'm hoping that Monday's going to run its course and Tuesday will give us some direction, whether high or low to start out the week, and away we go. UsCad, absolutely nothing to talk about on UsCad. If there's a more of a do-nothing pair other than the euro, the US dollar, it would be the UsCad. We had a nice little run down in here last month, and since then have done absolutely nothing. We've been working literally a 60 or 80 pip range for the past 2-3 weeks here. So nothing to talk about there, folks. Moving on, Australian dollar. Australian dollar looks to me like it is really pricing these highs in here, and it's going to falter, and price is going to run these guys out right here, especially right in here and right in here. It's almost the exact same right in here. Aussie has a long way to fall. Also on Aussie, we just, and I mean just, ran above this high rate into here, and so far hasn't really been able to get back up to that ground again. So, you know, again, folks, while we're trapped in this consolidation on the US dollar, all four of those pairs that I just mentioned are going to have a pretty tough time going anywhere until we get out of that range. So, again, if somebody has a crystal ball out there and you can tell me when we're going to stop seeing this consolidation, let me know, because I would love to hear that. But in the meantime, we've got a couple equal highs here on Aussie that it looks like they could be stretching their legs to get up into. That comes in the way of 0.7355 to 60. We'll just maybe call it 60 is a nice even number. I like that. We could see a move up to there. We're pretty close, you know, 73.16, so 45 pips or so to the upside, a possibility. And again, so these are the kind of targets that I mean. If there is a clear reason for one of these currency pairs to go higher, but yet it's only 45 pips, we'll take it. We're in a consolidation. If that's the clear chosen path, yeah, it's not 60 or 80 or 100 pips, but you know what? 40 pips is 40 pips. So, I mean, certainly nothing to write home about, but certainly nothing to complain about either. So I would highly recommend that if you're looking to do something like that. But again, we're in consolidation, so anything could happen. We could just see a brief pop above here and then a big strong rejection, or price could just go straight south from here. Unfortunately, you know, this is a mess. This is a mess. This is not fun trading to be in, and personally, I won't be trading anything like this in here. Okay, so use it at your own risk. Crude oil, we had a multi-day run higher back up into this consolidation level here. There is the possibility, I'm going to zoom in just a little bit, that we do see price run just above these highs right in here and shoot up back into this consolidation range in here. So I want to see if we do see higher prices. So my line in the sand last week was way back down here at 39.30 to 39.50. That was my line in the sand. So as price was shooting up into here, I said to everybody, I don't want to see price go above there. If it does, you know, we could suck up into this range in here. Obviously, it did that. We kind of held off towards the end of the week, though, not want to make any new highs and just hovering below these lows. So I think there's a real strong chance that we do shoot up into the 42 levels. But where it goes from there is going to be anyone's guess. Again, there's a ton of weakness out there right now on crude oil. And so I'm definitely not a big fan of a bullish tendency on oil. I honestly and truly believe we're going to see oil falter and run south. And this could just be the final hurrah before it does that. So I'm going to be watching this level very, very closely. And I am not doing a thing with crude oil I'm not trading a long up into here. I'm not trading a short from here. I'm watching price to see what it does if it does trade up into here. And if we see a noticeable reaction and failure to get up into there and an instant rejection, then we take the next logical trade and short it. If we trade above this area in here, we see what the strength to the upside is, and then we get in possibly on the retest of that area. But I'm not doing anything until either it bounces here and goes lower, or it comes above this level in here, and we see what happens. Okay, so that's my analysis on crude oil. And then finally we have gold. Gold again. Oh, so I called this. I'm sure you guys would love to go back and check out my last Sunday's video. I said gold was going to run down to 1934. What did we see last Thursday? Gold ran down to 1934 and then some. Actually, the low was 1932. So I was off by about a buck. Well, it was 1932.85. So I was off about a buck and a half, I guess you could call it. Not even. So not too bad on the forecasting side of things. Price was over here when I was talking about it. We saw a brief run higher, ran the stops here. Next day came out, ran the stops there, and then a big run south on Thursday, and then a Friday that did absolutely nothing. So level hit. So mission accomplished there. Again, same thing with gold, folks. I hate to sound like a broken record, but really, I mean, how do you trade this in here? It's very, very unpredictable. They're running the highs, they're running the lows. So again, you know, you sell the highs and buy the lows. I mean, that's really all you can do. But especially gold can get very, very wicky. Like, look at this in here. Prime case in point. Right? Look at these candles. Look at the bodies of the candles and then the wicks in relation to the bodies. Big, big stop runs on these. Like, these aren't tiny little moves here. And I'll tell you, if you guys have, you know, accounts that can't handle a lot of margin movement in it with things like this, you know, it's just going to stop you out constantly. You know, something like this in here. Look at this. I mean, that's crazy right in there. That was the, what was that? I can't remember, 2 weeks ago or 3 weeks ago, there was some massive news there and price just surged above and below, clearing both ends, only for it to run up and then come right back down to the range. So lots of wicks, lots of unpredictable movement. Last week was a very, very tight range in here. We got the downside objective completed. Now the million-dollar question is, do we still shoot below these lows underneath here, come down into this area, or are we just building up a big bull flag in here and price is going to shoot higher? There's a lot of bulls out there right now talking about, you know, 2,000, 2,500, 3,000 gold. I believe the more current instability there is out in the market builds a pretty strong case for those types of numbers on gold, but I'm not going to bet on it until we start to creep out of this level that we're in right now. So unfortunately, gold, I don't have a whole lot to talk about other than that. You know, we had some ranges completed last week, so mission accomplished. I'm waiting to see if we get below here or if we break out of this level here. And until then, I don't have anything else for you guys. I'm sorry. This is one of those weeks where it's higher or lower. It's a 50-50 flip a coin sort of week, and I don't want to you know, give you guys false hope that we're going to see one thing or another. I'd like to see this, but you know, again, don't you know, these are my thoughts only, and please don't go out and you know, invest money, your own hard-earned money, into something like that right now in an unsure market, because it is not the time or the place. There definitely will be a time and a place, but it is not now. So just take it easy. You know, again, if you want to trade, I would highly recommend small movements, 20, 30, 40 pips. Get in, get out, be done with it, be happy, and wait. And that's all I can say about that. So, and then the other thing, like I was saying to you guys, is check out some of the other futures markets, the grains and the softs and the meats and things like that. My members, I talk about those markets with them all the time, give them some good ideas and some future projections on those, which I am overdue. And to my members, I do apologize. I was supposed to release my thoughts on this quarter's setups that I like, and I will do that here this week without fail. So that's all I've got to say. Thanks for watching. Again, make sure you please hit that like button, leave a comment, let me know what you guys are thinking. I'm starting to get a few comments here and there, so for those that are commenting, thank you very much appreciated. For those of you who are not commenting, please do. Let me know what your thoughts are. If this is helping you, if this is hurting you, if you could care less. I'm assuming if you're watching it, you want to continue watching it. So, or if there's markets in here that you'd like me to analyze that I haven't looked at before, I would love some feedback. Let me know. Appreciate that. And anyone else who wants to take a look at our membership options, check us out at f45trading.com. And if you haven't yet, please hit subscribe to my YouTube channel. Every little bit helps. Thanks for watching, folks. I will catch up to you next week with another free installment of my weekly thoughts. And for all my members, I will see you in the chat room tomorrow. Take care.